everyone. Welcome back to the WYL Take Ownership podcast, where we're all about taking ownership of your mental, your economics, and your community. We're joined today by a good friend of mine, and I have full disclosure, an investor in WYL, and just an all in all great person, Sonya Rocvil, principal and founder of Bedrock Real Estate Investors. And so I want to thank you for joining us today. How do you feel?
I'm doing well. Thank you, Ofo, for having me on. This is
Of
great.
course, of course. Now I'm glad you're joining us because we're obviously talking in the midst of a lot of things going on. I think the proverbial phrase of the summer has been with everything going on, right?
Yeah.
And so so for us, one of the things we really wanted to harp in on with the Take Ownership podcast was we wanted to provide folks with tangible things they can take in this moment of time to better their lives and then to actually like execute within their lives as well. I think a big part of that too, our whole business is based on real estate and community. And for so long, the folks that have, constructed our cities and invested in our cities and created them to be what they are today, and I mean neighborhoods and everything, don't often look like us. And so that has ramifications and impacts on our community, that being the Black community, many different ways. And so some of the stuff we touch on today will be geared more towards that. So I want folks to know, if you're interested in real estate and you want to learn, get your notepad out and get ready. At the same time too, if you just really want to understand the dynamic of how the space works, how it is to start your own real estate company as an amazing Black woman, get your notepad out and get ready as well. But those are some of the things we want to touch on today. And I also want to learn how COVID's affected your business or the industry and all the things above. But how does that sound to you?
Sounds great. Sounds great. Thanks for that.
Absolutely, absolutely. So I gotta first start by asking, how did you get into real estate? Because I know you had a finance background,
Yeah.
you already had a career in that space. What encouraged you to take that leap of faith into this space, which was a new one for you, but one that you've done obviously very well in.
Thanks for that. It's a really great question. I started out my career first actually in accounting and in audit. So I was doing financial statement audits and then I became licensed and I became a CPA, and I realized I didn't want to be a partner at the firm. I just didn't want to do that. So I shifted and went into financial services, and I spent the majority of my career there. And while I was there, living in New York, I've always been fascinated by real estate. I started just consuming a lot of like real estate books and investment strategies and reading those strategies. And then in 2013, everything really changed for me because the group that I was a part of and the company that I was at got laid off. So we were all laid off, and it gave me some pause. It made me think, okay, I can try to find another role, in the company or some other company, or is this really a great opportunity to just take a step back and try to figure out this real estate thing, because I couldn't figure it out while I was at my job. So, fortunately, I had the opportunity to be able to take that step back, and I started consuming everything real estate. I joined the RIA in New York City, a Real Estate Investor Association in New York City. I got accepted into this program called Project REAP, which is also focused on diversity and inclusion for commercial real estate, a fantastic national program. And then I also found a multifamily investing group, and I found people who were doing the things that I wanted to do. And with all those three things, I found a great support base and anchor, and that just helped me pivot into investing passively at first, and then ultimately syndicating deals with joint venture partners. So it was a longer road than maybe some people take, but I felt like I got I was able to build up a lot of skill sets with my career path. And, at the time, I just had to have been right at that moment to just make that shift. Yeah.
No, that's amazing, and I think one of the reasons why this conversation is near and dear to me is I'm literally sitting in the brownstone, that my grandfather purchased in the '60s, right, right in Bed-Stuy, Brooklyn, as we have this conversation. And I know as a family what that's meant, what this house and this home has meant to our family. I've had cousins pass through here, uncles, aunts, myself, my sisters, my brother, right? Like everybody at some point has paid rent on Halsey Street. Like that's what it is. And so this home has meant so much to us, and it does help create this idea around generational wealth that we talk about often. And so for you, how did you think about first maybe even your own home and thinking through, do I want to be investing in single family? Do I want to be investing in duplexes or whatever the case is? And how did you decide to then move into multifamily and
Right.
take that leap? What was the decision making process behind that?
Right, right. Well, so I also, purchased a condo in Brooklyn, several years back at this point. And, when I think about that term generational wealth, and you think about yourself and you say, well, I can't, I can't pass down my degrees to my kids. I can't pass down, some of the things that I've done, but I can pass down the things that we acquire, as a family. I can pass down systems and processes, and a way for them to help generate cash flow. And if I do that for my family, and also for my investors, that's very rewarding, very fulfilling. And that's what it's all about. And so when I was thinking about investing, so I spent a lot of time, because one of the first things one of my mentors told me was, you need to have a strategy. What is your strategy? There's so many ways to get and involved in real estate. There's so many ways to invest in real estate. And I really, just being in New York, I was having a hard time with single family. I was having a hard time thinking about how I was going to, how you scale that business. I'm not saying that it can't be done. People do it very, very successfully. But I have to say that multifamily complexes just made sense to me. Maybe it's because that's how I grew up. Maybe, I don't know, but it just made sense to me in terms of the economies of scale that you get. You're not in a situation that, if one person leaves and you have that one place and you're like 100% vacant, and there's no income coming in until you get that apartment up online and running again. Versus if you have, a 20, 50, 100 unit complex, the percentage of vacancy is much different and much more favorable. If you have people leave, you have a lot more cushion. So to me, it just made more sense in terms of the economies of scale. So that's why I lean towards multifamily.
Yeah. And you've touched on several things too. I think that is super important for folks at home to realize, right? Because many of the folks that we're talking, in front of today, in terms of our audience, they're either new to real estate, or they have aspirations to get involved in real estate, or they're just generally intrigued by it but don't quite know how it all works. And so you've touched on the Project Reap and the different programs you were in to get started, the different events you went to kind of get the lay of the land. Can
Mhm.
you unpack that a little bit more? Like, so Project Reap, what is it? How
Yeah.
does it work? And why should someone else at home be looking to apply, or however it is you get involved?
Right. So Project Reap it's a national not-for-profit organization, and its focus is to provide diversity and inclusion in the commercial real estate space. And what it involves is a 10 to 12 week course in different markets in the U.S., and New York being one of them, where you get to learn from various leaders within the industry, all the different areas of commercial real estate. So for me, and a lot of people, when you hear about real estate, you think about your house, or you think about single family purchases and sales. But even though we pass them every day, we don't think about sometimes the apartments, the supermarkets, the hospitals, the hotels, the the strip malls, everything that's around us is really real estate, our schools, everything. So there are people, you know, and within the industry that work on all that whole gamut. And so you get exposure to learning about asset management, property management, what it's like to lease office space, uh, private equity, and what that means in terms of raising capital. So it just gives so many different facets of the entire industry. And then after REAP, and well, actually, before, you know, I say that, like, one of the things that was also really great is not only did you get to network with the individuals who were teaching the class, but I found one of the most valuable assets were the other people in my class. I'm in touch with most of them, or a lot of them today. And, you know, it's really great all these years later to still be in touch with people, to see how they are, to see them as potential business partners, or, you know, continued friendships. And that's what also led me to join the Council of Urban Real Estate, which is also a not-for-profit organization. I'm on the board for that organization, and we also focus on networking, programming to help people in commercial real estate, people of color, continue to connect with each other, and then also with the various companies and groups that are interested in recruiting and hiring talented people from New York.
Yeah. And it speaks to exactly how you and I met, right? We were both
Yeah,
part of the DCRE, council last summer
yeah,
through Adiola, who's always doing amazing things and just connecting great people. And you realize in a very short period of time, there, the network of us, the community of us, is very small actually.
small.
And so, doing what you're doing in terms of teaching and imparting that knowledge on others and inviting folks to learn about the industry is extremely impactful. And so even from just like getting to know you, like I know you teach a lot about real estate. I know, whether it's programs, whether it's at universities, what has spurred that interest for you? Why do you find it to be so important? Because you talked earlier about you can't really pass down your degrees to your kids. You can pass down assets and materials, but you can impart knowledge and processes, as you mentioned, in
Yeah.
them. So why do you find it to be so important?
I think well, I think there's just so many people that are out there, and I, think of myself where I really didn't know where to start. I didn't really know what was involved, and I think it's really important to be accessible so that people can learn more about different paths they may take. They may not take the ones that the path that you take, and I think sometimes even being able to say, that's not for me is just as powerful as knowing like that is for me. So I think that it's important to stay in the know and knowledgeable and informed. And it's great to be able to provide that additional information to people.
Definitely. And I mean, especially from such a unique point of view, right? Um, being a Black woman in this space, how, I'll keep the question kind of very general, right? How do you feel like what are some of the nuances that
Yeah.
that is created for you,
Right.
positive and or negative,
Yeah.
and when I say negative, I think of more so hurdles to jump as opposed to barriers, right? So, how has that affected your experience in the real estate market?
Right. Well, I mean, very, very quickly, being in a room of commercial real estate professionals, you very quickly see that being Black and being a woman is a complete minority. You are definitely. I mean, it's a very white male, industry, and it's been like that for a long time. And I think, I think what's happening over time is that and that's why the education is important. As more and more people come into the industry, you have to realize that there are opportunities to really, because the other thing that's underneath it is real estate is a wealth builder. for people. And so when you look at the, the distribution of folks in the industry, you also have to think about that on an economic level as well. And I think what we're ultimately wanting to see is that by bringing diverse people into the fold, you're not shrinking the pie of what's available. You're making it bigger so that more people can be part of it. And I think that that's one of the things that's really important. So I remember and also New York is very different from the rest of the country. So I when I went to like a multifamily convention, it was a national convention, and it was quite a shell shock, even for, I spoke to a number of women who were Caucasian, who are white, and they were like, wow, there are just so many men here. It's so male dominated. And so you really get like, wow, this is what the industry really looks like. So, I mean, I have to say, one of the things is that people will always see me, like, so when I'm making like appointments to meet with people, like, I know they're gonna find me. So um you kind of have to use everything to your advantage.
Yeah, definitely, definitely. Even thinking about kind of where things are today, um, COVID is having, lasting effects, on our industry particularly, and of course many others. But I think of, and I'll tie this to the wealth question a bit too, because I think of things like the fact that, 13% of America is Black, but 40% of America's homeless population is Black. Um, I think about the fact that 60% of Black people are renters.
Mhm.
And so our home ownership numbers are way out of whack compared to white families. And that, again, when you don't have those opportunities, you don't have that capital, that adversely affects our entire community at large.
Right.
So even in thinking through when you're looking at a deal, for example, right? You guys are looking at acquisitions and growing into new markets.
Mhm.
And for you, maybe you can unpack a little bit about maybe some of the locations around where you guys focus, because I know primarily it's in the southeast region of the U.S. But how do you think about how to have inclusive ways of building communities within buildings, of building communities, around neighborhoods and cities, right? What is your thought process and download in that process of bringing any kind of acquisition or new project to fruition?
Right. Yeah. So, so most of all the deals that we've done so far have been as syndicated deals, have been in Georgia. They've been in that market. Just getting started in real estate, trying to acquire buildings in New York, I thought was just outside of my reach in terms of the capital required from New York acquisition. So, it had me look at other markets, and again, finding people who are doing what you're doing is a way to help to accelerate that. So you can see how folks do that. One of the things that we definitely try to do, because having a community is very important. It's critical, and when we think about some of our properties, some of the things that we try to do is definitely, first of all, like fostering communication. We have third party management that manage our properties because we're here in New York, but we do need people on the ground who are going to be there to be points of contact for the residents. And so, what we've done is, especially during COVID, well, first of all, we had to kind of change our communication style. It mostly was, phone calls, even though we would call people in the past, but definitely like, text, emails, and phone calls were the main methods of communication versus a door-to-door approach, just because we wanted to maintain and protect the safety of our property management team and our residents. So, when, we were finding that people who were typically, on time or had delays or issues with payments, it was important to reach out to them to just keep that discussion going. It's very important for landlords and residents to speak, especially if you like where you live. Usually you can try to work something out. Prior to that, prior to COVID, we did some raffles. We, like, for Thanksgiving, we gave away turkeys to some of the residents. We tried to, we do some newsletters to them as well, just keeping them informed. And we ourselves try to understand what's happening in the local community to try to incorporate that sometimes in our newsletters. But a lot of it is used to just give them updates about things that may be happening in the property, especially when we were doing a lot of updates and changes to the exterior. And in some cases, it was a nuisance. So we wanted to give them that heads up and help them realize that we know that this is not convenient right now, but we're moving towards having a better looking building and a better looking facility for them. So that's why we embarked on that. So I would say, communication is really key, and having that fluid communication is really important.
Right, right. And so, you being up here in New York, your team being part of, well, your team's here, and then you have team members effectively through that third party property
Yeah.
management group in Georgia. And, how do you, from a tactical perspective, how did you approach building your team? Like, how did you know that was the right management group to work with? How did you know you were surrounding yourself with the right people, and what were you looking for within those team members?
Right. Yeah. So the property management company that we have now, we've had them for we've known them for a while. So they weren't the first company that we worked with when we started investing in Atlanta, but when we moved to this larger size property, and just some of the needs that the property had, we ultimately thought that they were a good fit. So some of that is just over time, just having communication again, and just talking to people and building relationships. And so what was good is that the CEO of the company understood the area, he understood the needs, and he really worked with us to try to find the right regional manager for us, who was going to be the person overseeing the actual folks on the ground. And we also set up we have still weekly calls to talk through everything that's happening on the property, you know, every week, to make sure we understand if there are any large capital expenditures that happened, if we understand where people are in terms of move outs or people coming in, getting that constant feedback. Sometimes we need to make adjustments to our strategy or rethink how we were going to approach something, and or understand if there was going to be something that we didn't expect to happen, and then now we have to plan for that as well. So that's really important. And then one of the other properties is when we purchased it, it was had a lower level of vacancy, and now we're working to stabilize it and just get a consistent group of residents in there. So we have the same regional manager but different on the ground person who's helping to work with us to do that. So again, monthly meeting, weekly meetings, and very frequent communication, and reviewing a lot of reports as well.
Well, I'm sure, I'm sure. I mean, in these times too, I'm sure your ear is close to the street in terms of government, like what's happening,
Yeah.
what bills are being passed, what stimulus, checks are going out and whatnot. How is that, the Americans for the most part were given $1,200, right, over the
Hmm.
last
Hmm.
6,000 or so, 6 months or so, right?
Right.
Um, the rent relief that has happened and or is not happening, how has that affected your business? And what
Yeah.
would you like to see government do in terms of stepping up and doing more for the residents? Because inherently that ends up being operational, capital for your business.
Right. Yeah. Yeah. Absolutely. So, I mean, it was definitely, we were very concerned about our residents and the loss of jobs that were happening there. So, we came up with different ways to try to, and gave concessions to help people. If they're able to pay earlier in the month, we would give them a slight discount in their rent, so that we could facilitate getting some more of the cash to make sure we were able to pay the bills of the property, because that's what became a very keen focus. We wanted to make sure that our mortgage is paid, the water was paid, and the people that work on the property are paid, because if there's no cash coming in, I mean, that all of those bills have to be covered before anything comes, and it's like considered free cash flow. So you really need to make sure that we have all those, and then any of the capital expenditures as well have to be covered as well. So that was our focus. How do we make sure that we're keeping people safe, that we're doing our as much as we can in terms of collections, also working with people, understanding their situations. And I think that the stimulus was very helpful in that, because we did have a couple of months where it was a little bit more of a strain, but I think overall we did really, we did well. And again, a good thing about having a community is that people feel that they belong. They feel that they know, the person who's collecting the rent. And this is at the base of that is our property management team. And, they're like, well, I know that I talk to the manager all the time, and the rent is due, and look, I got to tell her what's going on with me, or I'm going to, I'll just go ahead and make my payment. These are some things that keep people connected to each other. So I think that, ongoing, we just want to make sure that I want to make sure that government is continuing to focus on the needs of the people, especially, the working class folks and workforce housing groups. These are, many of times the people who are on the front line. Those are the people who are working in the grocery stores, or, your nurses, and, people who are helping in the hospitals or working in the hospitals. And, if we're not making things available and making work available, funding available for them to be able to have a decent quality life, we really have to take a step back, because we realize that COVID has exposed a lot of things. And I think one of the things is just like how interconnected we are, and how, when you're considered, non-essential, you can stay home. That's a luxury, but that means that all the other people that maybe you don't think about every day are really essential. And we need to make sure that we have housing for them.
Right, right. So, I know earlier in this process, when the president came out and announced that effectively there was going to be this eviction moratorium.
Mm-hmm.
And there, I think there wasn't too much color to it, and people understanding, that was really supporting government-backed, properties, effectively the
Mm-hmm.
Fannie Mae's and the Freddie Mac's properties they were backing. So there's a lot of people that actually weren't captured by that, but maybe their states were able to step in and put different moratoriums in place. Um, as a landlord, what is it? What are the things that you want maybe renters to be more understanding of? Because I think in the beginning, when that eviction moratorium came out and it was like widely broadcasted, you have people that were, and this isn't true for most, but you have people
Mm-hmm.
that were making money. Maybe they had a white collar job. They were sitting at home, like myself, on a computer all day, and in that regard, they were like, well, if they're not paying rent next door or upstairs, why should I pay rent? How
Right.
did you? What were those conversations like to make people understand? Look, if you can swing it, no matter what is happening or what
Right.
freezes are in place, like you should, pay it. How do you convey your perspective or point of view to a resident?
Right. Yeah. I mean, so I think one of the things there is just that kind of, one of the points I made before is just that how we're all interconnected. So again, like all of the money that comes in from the rents first goes to paying to all the bills on the property. So we want to be able to make sure that we have, if there's an emergency service person who's available, on our team to be able to help you with like, a major issue that's happened in your apartment. We want to make sure that there's still water for the building, because that comes directly to the owners. It doesn't get, sometimes residents pay portions of the water, but the bill comes to the owners, and that's the owner has the ultimate responsibility to pay for that. So what happens is, if you're not able to, I mean, if you're not paying, and you can pay, you're really jeopardizing your community, and you're putting at risk also the people who work at the property, because in horrible scenarios, if all of a sudden your rent roll becomes extremely low, you have to look at ways to still pay those really essential bills. And you have to look at what expenses are you going to take out, and that means that that could be affecting somebody else's job. That's again how we're all interconnected with each other, and that's the last thing that we want to do. We don't want to have people even further accelerating the joblessness in society, because we didn't get rental payments from people who can pay it. That's devastating, and it's devastating to families. So that's how I would look at it, and frame it. We're really, I mean, a lot of people, it was an adage, everybody was saying, we're all in this together, probably more than we know. More than we know, because again, the people who are driving your kids to school, the people who are teaching them, the people who are doing the cleaning of the schools where your children are going to be attending, the people who are cleaning the airports, like all of these people live in our communities. So if it all really has a negative impact and snowballs if there are no funds available to pay them.
Right. I mean, the interconnectedness is so important to highlight, because for the folks that are at home that are aspiring to get into real estate, that are aspiring to acquire properties, being an investor, oftentimes it's just thought of as like get rich quickly. It's thought, and that's the amount of thought you have to put into the day to day, understanding your residents, what they need, what's going to make them happy till they sign the lease. You touched on rent rolls, like, I think of things like NOI, your net operating income, or your CapEx or your OpEx. Could you unpack maybe a few of the terms that are most important to you as a real estate investor? What are things that you're looking at that anyone looking to get into the space should be mindful of in real estate?
Right. Yeah. So, I mean, a few things are occupancy level. So how many people so actually occupancy has two pieces. It's physical occupancy. So how many people are actually inside of the units? And also, almost actually even more importantly, your economic occupancy. How many people are paying? How many of those people that are in the units are actually paying? Because that can certainly be, that's an issue, and that goes back to what we were just talking about. So we really have a pulse on the economic occupancy, and then and the flip side of that is the delinquencies. So especially during this time, we're heavily monitoring the delinquency amounts, and trending that out to understand, is it growing, is it increasing? Are people leaving the property and then leaving large balances, and then we ended up having to write those off. So understanding your revenue and top line revenue and collections, overall collections, is very, very important. That's something that is highly focused, because that's your income. So that's your top line. Then also understanding your operating expense trends. So usually what we always do is we have it's not usual, it's always, we have a budget. So we understand, we plot out what our operating expenses are expected to be on a yearly and monthly basis. So we're always tracking against, okay, what did we expect the expenses to come in is it higher and lower, and why? So doing that deep dive and understanding what's happening, and then on top of that, okay, so this is out of whack. Why is that out of whack? And it's continuing that spiral of, why did this happen? Why did this happen this month? Sometimes even when we have a very strong collection month, I still ask, like, what happened? Why is it better this month? I still want to know, better or worse, what's happening, because these are things that help to inform your decisions, going forward. So paying attention to your economic occupancy, your collections and delinquencies is extremely important. Understanding how you're trending against your budget for your operating expenses, which you should be working on that budget with your property manager, so that, because you're really all in that together as well. That's another one of your key partners. You need to make sure that, you're in lockstep and you understand how the property is going to be run. And if it's not, and if it doesn't, things aren't making sense, you got to go back to them to help you understand why it's not, and you have to figure out how it is going to make sense, because those are the numbers that you're working towards. So those are some of the metrics. Also, I'm looking at turnover as well. So that's, talking to what percentage of people are leaving the property. So in some cases, it's good when people leave, and in other cases, it's unfortunate to see, some of your stronger residents go. So you want to keep them too, if you can. So if there's feedback, sometimes there's just feedback that you want to get to understand, why are they leaving? What's happening? And sometimes we hear people bought a home. Good for them. Like, that's great. Sometimes you hear other things that are negative, like they lost their job. They don't think they're going to be able to continue moving forward. And, they very responsibly said, we're going to leave. So, and they find shelter, somewhere else. So just understanding the dynamics of the turnover is also really important. Yeah.
Yeah.
And
So,
then ultimately, I'm sorry, those the revenue and expenses together, that impacts your net operating income, and that's the basis that's used to trade. If you're ever selling your building, they want to understand what your NOI is. So that's why NOI is so important.
and so before you even get into the crux of it all, right? Like, you go into a deal knowing these are the most important things. What is it that makes Sonya go, okay, as principal, as founder of this company, we're going to invest in this property? Like, what are some of the things you're looking to check off in your
Mm-hmm.
mental checkbox before? I'm sure it's physical as well, right? You're writing this
Yeah.
stuff down, but
Yeah.
what are the things you're looking to check off to say this is the deal for us?
Yeah. So one of the things that we're looking at is, where is the value add? How can we make this property better? One of the first properties that we purchased, that was to date one of the best deals that we did. And what we found was that prior management just wasn't operating it well. The area where we were investing is, very niche, and it was a highly refugee area. And the people in there are here legally, but they were fleeing from very horrible situations in their former country. And what was actually really wonderful about that community was the support system and base that was there. There was a lot of people who were the English as a second language, job training, a lot of things were going. And so you had a resident base that was, very happy to pay, very happy to just be in a safe, clean place, especially from where they were coming from. And, the prior management didn't really understand the resident base that well. And When we came in, our property managers actually, they're also investors. They also purchased and manage their own properties, and they're very familiar with the area, and they were able to break down some of the communication barriers that were taking place with like prior management. We were able to also price the units more efficiently and find ways to decrease some of the expenses, so it ended up operating very, very well. So finding areas where you have strong communities is definitely a plus. Doesn't happen all the time, but that's a great thing to look out for. um, Understanding where it is that you can make the property better for the investors that we work for, and for the residents as well. And sometimes that's additional amenities, like adding a laundry facility that didn't exist there before. Could be something that helps to add value. It will help to generate some income, but it also provides an amenity that residents were having to have to travel further to get to. So the key thing is, how can we make the property operate more efficiently? And again, that's sometimes just understanding where the operational issues are, looking at ways to save on expenses. So one of the other properties we looked at, we knew if we implemented some water conservation policies and mechanics, we were going to be able to save water overall for the property, and that reduces expenses. So that was a value add, and so those are things that we definitely look for. At how are we going to continue to push and improve the value of the property?
Absolutely. And I'm going to move you even more upstream in this process. So for Bedrock, real estate investors, break down what the process of like is, what the process around securing capital is like. So
Yeah.
is this all money coming out of your pockets? Are you guys fundraising annually to build a fund and then go out and acquire properties? Is it you source the deal, you find the deal first, then you present the deal to investors who then say, okay, we'll go in with you on this property? Like, what does that component look like?
Yes, yeah. So I don't own all the properties by myself yet with my own money, but that's one of the goals ultimately.
Sure.
So for now, what we're doing is on a deal by deal basis. When we find a deal that we think makes sense, what we do is we present it to investors, and what we go through a process called syndication. So syndication is just a formal way of just saying that we have agreements that we're holding to have people pool their money together to purchase an asset. In this case, it's apartment buildings. You can syndicate deals for probably most things, but this specifically is focused on real estate and apartment acquisition. So through that process, that it's getting the right legal documents, making sure the correct filings are put in place, and making sure that we have appropriate disclosures to our investors, because it's important for people to understand the risks, because with everything there is a risk. So you have to weigh that out for yourself, and making sure that everything is in compliance with legislative bodies. So that's what ultimately a syndication is. It's a structured and way of pooling together people, and for us it's really been friends and family so far who've wanted to invest in apartment buildings, and that's the formal way that we do it. That's how we formally pull everybody together.
Got you. And in that syndication process, how have you, how have you procured that group of people, right? Like you mentioned friends and family.
Hmm.
So let's say which could be true actually very soon, right? That's my goal. Let's say I am tapping your shoulder like, hey, Sonya, I want to invest with you. I want to see the deals coming through. Like what should I be preparing for in terms of, first, the threshold of capital? Am I
Right,
even there yet? Right.
right, right.
And then and then, well, we start there, right? I know France, our producer, he wants to get in real estate, right? Like
Yeah.
he has friends in real estate. Same, like if we're reaching out to Sonya and we're saying, hey, look, this is what we want to do. What would that look like?
Right. Yeah. So I mean, so honestly, that initial capital piece has grown over, from the time that we started doing syndications until now, and I think that's just because the deal sizes have gotten bigger, and also, prices have gone up as well. So that's
Are you saying we're broke? What are you
I'm
trying to
not
say?
I'm not saying that. I'm
I'm
just
just kidding. I'm kidding. I'm completely kidding.
no, but so yeah, so we determine on a deal by deal basis like what that amount is, and then, once we have that minimum set, we just work with people to understand how they want to be involved, and then, a part of that process is all of the agreements that they need to sign. So as I mentioned, there's a lot of disclosure agreements, but then we also, we review the deal with everyone, helping our investors understand why we think this is a good deal. First, we usually talk about the market, understanding, to give that macro view, what's the market. Then also understanding, so once you go from the market, then, sometimes the submarket, and the property itself, why we think there's value in it. And then we always project returns in there as well. So we talk, we talk about the different return scenarios, and then also the different exit strategies. That's very important too, to understand that. It's important for people who are investing to understand how long do they think their money is going to be, tied up in this investment. Unlike the stock market, this is not a liquid asset. Meaning that you can't just, what, today I'm going to invest, but next year I just want to get my money back out. It doesn't really work like that. So you have to be prepared for it. And there have been people who have come to me and said, I really want to get into the deal, but, I'm trying to figure out if I should save this and do this. And I'm just like, you know what? This is not the right time. There's going to be other deals. Like, it's important to, um, that people feel comfortable, with that they're putting in their money and it's going to be there for a while. And it doesn't seem like that's a good strategy for them at the time. It's probably not a good strategy, and they should just wait for the next one. There'll be others. So that's how we usually, work with the people. And then throughout the hold of the investment, we have, quarterly webinars to update our investors, to keep them updated about what's happening. We usually also talk about, what the payout structure is going to be for the investments as well, how frequently we expect to do distributions, and, depending on our execution plan, depending on our plan and what we're executing, that's going to determine maybe when the first payout is going to be. But we try to really set that expectation, up front for our investors, so they understand what they're getting into. Some people are like, oh wow, you're looking at, 5 to 7 and maybe even a 10-year hold, and we anchor people in that, because that's the length and the term of our loan. However, we're always working with our brokers on the ground and understanding what's happening in the market, and if there are opportunities, to divest a little bit earlier than that, because it's in the best interest of our investors, and, we'll do that.
Awesome. And I know we're coming up against time here, but I still have one question I want to ask. in the investment space, and I love the synergies too, in hearing about the investment world and the real estate world, as well as because it ties so closely to the tech world, right? You need that exit plan. You need the syndicating deals. All these are the similar terminologies to what I use every day in building Who's Your Landlord.
Yeah.
With the Jobs Act, that was passed under the Obama administration, that opened that paved the way for people that were not, historically accredited investors to get involved in more real estate deals and technology deals. And now, when you think about, real estate, there are platforms like Republic where we've raised capital from a tech perspective that
Mhm.
also now allow for real estate folks to go and raise capital toward real estate deals.
Right, right.
Do you foresee Bedrock? Would you ever consider maybe uploading a current deal, to the public to invest in as well, or is it
Mhm.
not kind of fit your thesis? Or have you guys? Yeah, what are your thoughts and just in general about
Yeah.
that shift in the space?
I think it's a great opportunity to be able to allow non accredited investors, and even in our deals, because of the regulations that we follow, we can also accept non accredited investors too. You just have a limit to them in our syndication deals. But I think that the platforms that are available are opening up, to a broader group of people who want to get involved in real estate, and I think that's awesome. For right now, we haven't really fully explored, leveraging one of the platforms. I'm not saying it's something out of the question, or something that we'd never do. Just haven't done it yet, and it's always a possibility. Right now, we're continuing to network, to meet people, and talk to different people who are interested and through that, and through joint venturing, pooling some of those people together. I think that's been working so far. So we'll see if at some other point we need to think of other means or methods, but right now we haven't fully explored what that could offer this time.
Yeah. And I just felt I had to ask the question because, to bring it kind of full circle, I met Adiola at her Avant-Garde Network event. So I was a speaker. This had to be maybe the end of 2018. I was a speaker, and the event that evening was focused on online equity crowdfunding.
Mhm.
So she had reached out because she had heard we had just successfully closed a round.
Yeah,
And then, that's how the whole, relationship now and all the way
yeah,
downstream has worked out. So
yeah.
it's a blessing to
It's
be here with you today, and
Oh, thank you so
sending all the
much.
love to you and your family as well.
Thanks so much. Back at you.
Yeah, thank you. How can people connect with you or follow you, online? What's the best way for them to reach out?
Yeah, so you could definitely find me on LinkedIn. So you can connect with me there. Just let me know that you heard about me from this podcast, because sometimes you don't exactly know where, you don't exactly know the people who are trying to connect with you. So it's good if you always putting that little personal note, or just like a one liner, always helps, and meeting someone new. So do that. Also, you can definitely go to my website. I do newsletters, and happy to share with people some of the work that I'm doing. It's bedrockreinvestors.com. And also I'm on Facebook as well. So Bedrock Real Estate Investors. So you can reach me there too.
Awesome. Awesome. Well, it's been an absolute pleasure today. Everybody, make sure to connect with Sonya online. She's doing amazing things, and it's helping people do amazing things as well. I can raise my hand as one of the people. I'll pat myself on the back too. Um, but thank you so much for joining us tonight. Again, everyone, this is WIL Take Ownership Podcast. We're all about taking ownership of your mental, your economics, your community. Take care and have a good one. Peace.